Ever looked at your paycheck and thought, wait, where did all my money go? You're not alone. For many people, especially those new to the workforce, the information on a paycheck can feel like reading a foreign language. From gross pay to net pay, deductions, taxes, and benefit contributions, there's a lot more happening behind the scenes than just the number deposited in your bank account. Understanding your paycheck is one of the most powerful tools for mastering your personal finances. In this video, we break down the top 10 tricks to help you read and understand your paycheck like a true financial pro. 1. Know the difference between gross pay and net pay. The first step in decoding your paycheck is understanding the difference between gross pay and net pay. Gross pay is your total earnings before any deductions, such as taxes and benefits. Net pay, also called take-home pay, is what's left after all those deductions are taken out. Many people see their offer letter and assume their monthly deposit will match the salary they agreed upon, but net pay is always less. Knowing this distinction helps you budget realistically and avoid surprise shortfalls. 2. Understand federal, state, and local taxes. Taxes are the biggest deductions from most paychecks. Federal income tax is determined by your income and filing status, while state and local taxes vary by location. Some states, like Florida or Texas, don't have income tax, but most do. Your W-4 form helps your employer determine how much tax to withhold. It's important to review your withholdings periodically to make sure you're not overpaying or underpaying the IRS, both of which could cost you a tax time. 3. Don't ignore FICA, Social Security and Medicare. FICA stands for the Federal Insurance Contributions Act, and it refers to the payroll taxes for Social Security and Medicare. These mandatory deductions fund critical government programs. Currently, 6.2% of your paycheck goes toward Social Security, and 1.45% goes to Medicare. Your employer also contributes an equal amount. Understanding FICA helps you appreciate where some of your money is going and how it supports you in retirement or if you become disabled. 4. Get familiar with pre-tax deductions. Pre-tax deductions reduce your taxable income and can include contributions to things like 401k retirement plans, health insurance, dental plans, or flexible spending accounts, FSAs. Because these deductions are taken out before taxes are applied, they can help lower your overall tax bill. Knowing which deductions are pre-tax can help you optimize your paycheck and make smart choices about enrolling in employer-sponsored benefit programs. 5. Watch out for post-tax deductions. Post-tax deductions are taken out after taxes have been applied to your income. These might include union dues, charitable contributions, or payments for voluntary insurance plans like supplemental life insurance. While they don't lower your taxable income, they are still important to track so you can understand the complete picture of where your money is going. If you see unexpected post-tax deductions, ask your HR department for a breakdown. 6. Track your hours and overtime, if applicable. If you're an hourly worker, your paycheck will reflect the number of hours worked, including any overtime. Overtime is typically paid at 1.5 times your regular rate for hours worked over 40 in a week. It's essential to review your paycheck to ensure your hours and pay match what you actually worked. Mistakes do happen, and catching them early ensures you're properly compensated for your time and effort. 7. Review year-to-date, YTD, totals. Most pay stubs include year-to-date, YTD, summaries that show how much you've earned and how much has been deducted from the beginning of the calendar year through the current pay period. YTD figures are especially helpful when planning taxes, checking savings goals, or preparing for financial milestones. By regularly reviewing these numbers, you can track your financial progress and make adjustments if needed. 8. Understand employer contributions. Your employer may contribute to your retirement plan, health insurance, or other benefits, and these contributions may not appear as part of your gross pay. However, they're still a valuable part of your total compensation. Reviewing your pay stub and benefit statement together helps you see the full value of what your employer is offering. It's easy to overlook these benefits, but they can significantly enhance your long-term financial well-being. 9. Look for hidden fees or mistakes. Payroll errors and hidden fees are more common than people realize. Whether it's incorrect withholdings, double deductions, or inaccurate hours, mistakes can cost you hundreds, or even thousands, over time. Always double-check your pay stub for discrepancies. If something looks off, bring it up with your HR or payroll department immediately. Staying vigilant protects your income and reinforces smart money habits. 10. Use paycheck calculators to estimate take-home pay. Several free online paycheck calculators allow you to estimate your net pay based on salary, state, withholdings, and benefits. These tools are especially helpful when starting a new job, considering a raise, or adjusting your W-4 form. They provide a clear breakdown of what you can expect in your bank account and help you make informed financial decisions, whether it's saving, investing, or spending wisely. Understanding your paycheck isn't just about knowing how much you earn, it's about taking control of your financial future. Every line item on that stub tells a story about where your money is going and how you can make it work for you. From taxes and benefits to overtime and deductions, these 10 tricks can transform how you view your paycheck. The more you understand about what's happening behind the scenes, the more empowered you'll be to make smarter financial choices. So next time payday rolls around, don't just glance at your deposit. Dig into the details and take control like a pro.